everybody. Hey, hey, how y'all doing? What's going on, man? I look a little overexposed, but it's all right, because I'm still not a bull, not a bear. I'm a beast. Y'all know what time it is. Look a little overexposed. What happened if I did this? Let's see what happened if I did this. More overexposed.
Hey, gentlemen, is this a private thing? Are you guys doing your one-on-one?
Oh. You talking to me, Jim?
No, this is Marco. I
Oh,
didn't know
Marco.
if you guys are doing a one-on-one or not.
Oh no, I don't know why I keep every time Marco talk, I be thinking it's Jim. Marco got a little bit more excitement to his voice. Jim be sounding like me. Jim be sounding like he, you know what I'm saying, like he ready to lay down. Yeah. No, we on the tube.
Must be related.
It must be related. Yeah, we on the tube, man. We on the tube.
Okay.
Yeah, you and Jim just are the ones that pulled up in the Discord. Everybody else scared. I might ask them to unmute or say something. You feel me? Everybody,
Cool.
everybody running from the class participation. What's going on, man? Good evening, everybody. Hey, if this is first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not first time tuning in to Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's just Big Spider if you don't hablo español. And you are now tuned to another episode of The Intraday Price Action Recap. Brought to you by the Gang. And if you don't know, the market can go up, the market can go down. We don't care. Somebody tell them why we don't care. While I'm showing my shirt. Marco, tell them why we don't care if the market go up or down. Tell them why. Tell them why.
We read price.
We read price, but what the shirt say, Marco?
I am not a bear, a bull, or a bear. I am a beast.
That's it. I'm not a bull. I'm not a bear. I'm a beast. Right? They say bulls eat, bears eat, and pigs get slaughtered. We don't care about that. We not a bull. We not a bear. We beasts. You feel me? And why is that? Just like Marco said, because we read price. We read price over here, partner. We let price action tell us when to take action. You hear me? What's going on? Shout out Marco and Jim inside the Discord. Speaking of Discord, if you are a monthly channel member, those that support the channel via monthly subscription through the U of the Tube, I appreciate you. Now, the channel memberships through YouTube, it's not going anywhere. But the channel membership through YouTube is no longer the method of being a part of the Discord. Being a part of the Discord has been transferred over to WAP. It's been transferred over to WAP. Meaning, if you want to be a part, it's a paid Discord service now. So if you want to be a part of the Discord, utilize the WAP feature for paying your monthly subscription. All right? It's an automated thing. When you pay through WAP, you're automatically put into the Discord, right? If you forget to pay your bill, it will put you into a section that reminds you to pay your bill. If you cancel, right, it'll remove you from the WAP. It's all automated. I have nothing to do with putting you in and taking you out anymore. In the past, the Discord was just a thing that I offered as my appreciation to those who supported the channel monthly, to give you more access to me, to give you, you know what I'm saying, more access to my time. When I pop up live, I don't feel like getting on YouTube. Y'all can still have access to my thoughts I want to regurgitate in reference to price action. Now, if you want to continue to be a part of the Discord, right, the old server isn't going nowhere. It's going to be there. I'm just not going to be active in there starting on March the 1st. Those who've been, a member of the gang prior to February, you are grandfathered in at the price that you currently pay for the monthly support you decide to give, right? You're grandfathered in at those prices. It ain't nobody business how much you decide to give at those prices. But there's links inside the Discord server under the announcements tab. If you go into the announcements tabs, let me go here, move it out the way in case it want to show stuff. Okay, if you go into the announcements tabs, you'll see something that says OG Gold, OG Black Spider, and OG Mentee, right? These are the links that get you grandfathered in, right, at the price that you chose to contribute monthly to the channel as saying, hey, Tim, I really enjoy your content. I want to, be a monthly member of your channel. These are the links you use to get grandfathered in. There's no silver, there's no more Mentee, right? In the new server, there's only gold, platinum, and diamond. Silver is gone, right? Mentee is gone, right? Gold is still gold, Black Spider is still platinum, and Mentee, right, is gone. There's now diamond. Diamond is a mixture of what Mentee used to be and a new, what Mentee used to be and a portion of what the boot camp was, right? Like a portion educational and a portion of tape reading and a portion of Q&A, right? So diamond is a mixture of what Mentee was and what the boot camp was, okay? So those are the links for anybody that's not a part of the gang, right? The links is a link in the description below, right? There's a link in the description below. Now, I am smarter than the average bear. So, for those who think they're not smarter than the average bear and think, hey, I'll just sign up to the monthly membership now and go in and get the codes to get grandfathered in. You can't do that because right now, to get in the Discord, I have to put you in there. So if you wasn't in before February 1st, you won't get those links. Yeah. So, link is in the description if you'd like to join the Discord, right? If you've already joined the diamond tier of the Discord, we've already started the 3-day-a-week tape reading. We've already started. We have tape readings on Monday, Wednesday, and Friday. We've already started that. That Discord, I'm not supposed to start hot and heavy in that new Discord until March the 1st. But for those who, jumped in early, I said, hey, since y'all in here and you're in the diamond group, let's go ahead and kick it off. We'll start tape reading early since y'all in here early. The first educational lecture is on March the 5th. The lectures are going to be on the first Wednesday of the month at 7 p.m. at night. Right? So the first lecture is March the 5th, and it's being brought to you by, I think, Jada made the request. I have a channel in there for lecture requests. If it's something, lecture suggestions. And then Jim has brought us a new one that we will be going through in April. Jada brought us trading breakers with fair value gaps. So we will be discussing trading breakers with fair value gaps. And there's a particular model by ICT that uses breakers with fair value gaps called the unicorn model. So we will be covering trading breakers with fair value gaps come March the 5th inside via Zoom. 7 p.m. on March the 5th. Right? And Jim has brought us another suggestion. It said using price legs and dealing ranges to read, price, and trade. Using price legs and dealing ranges to read, price, and trade. So that will be our April. March, yes, April. Our April 2nd lecture. April 2nd lecture being brought to you by Jim. Using price legs and dealing ranges to read, price, and trade. That's very vague, Jim, but guess what? Y'all, I see what y'all doing. Y'all trying to get Big Spider to give y'all the keys to the kingdom. Jada want to know how to trade breakers with fair value gaps. Jim want to know how to use dealing ranges to read, price, and trade. Y'all trying to get Aranya Grande, hey, to give y'all the keys to the kingdom. Look at you. Look at you. Yolanda, she in the boot camp, she done tricked me into giving out about 3 models. I was like, part of the boot camp was to discuss models and help people develop their models based off what they can see. And Yolanda then got crafty and asked me these questions and got me to trick me into giving out about 3 models. And then I'm on one-on-ones with people saying, oh, this the model that I trade. And it's exactly what I said in the boot camp. Get out of here. I gotta love it. Hey, man. Let me stop shucking and jiving. Shout out Rhonda Green. Shout out Tish. Shout out FC. That's all the names I see in YouTube. I see more numbers than I see names, but guess what? That's all I'm going to shout out because that's all I see. Let's get over here to the desktop and talk up. Wait a minute. I ain't got my trading view open. Why y'all ain't tell me I had my trading view open? Discord. Y'all supposed to look out for your boy. Y'all supposed to be like, Tim, you ain't got your trading view open. And then I'll be like, oh man, I don't got my trading view. Hey, got a little premium gap up on the new day. Look, premium gap up on the new day. Whoa. Hold the phone. Hold the phone. Okay, let me do this right here before I go. Right? Before I do anything, right? We're going to come right here. Right? 15. Boom. We're going to come right here. Go to a 15-minute chart. Where's Yolanda? Is Yolanda in here? Where is Shonister? Shonister, if you don't get your butt in here, Yolanda not in here? Now, the day when I need her to... Jim, Jim was there this morning. Who else? Jim, I see you was there this morning. Who else was there this morning besides Jim? Tish, you was there. I think, yes. Was Tish there this morning? Who was there this morning on the tape reading session? Yes, Tish was there. Jim, was you there?
Yes, I was.
Okay. All right. Tish, Jim, when we was on a tape reading session, right? Tish said it took the sell side you spoke of, right? That ain't even what I was talking about. Thank you, Tish, right? When we was on a tape reading session, it's a 15-minute chart right here, right? Do y'all remember what Yolanda asked about when price started trading up into this 15-minute SIBI right here? Do y'all remember what Yolanda asked, and do y'all remember what my reply was? Huh?
I think she mentioned it being the first 15-minute fair value gap.
Uh-huh.
And session.
Mm-hmm. And she said, can you trust touching it and going down? Yeah. Right? Okay, and what did I tell her? I said first of all, I say you trust the process. I say, but you can be the type of trader that wants to see what, right? And what scenarios did I give after I said, yeah, you can trust the process there, but you may be the type of trader that want to see what. And do you remember what I said after that?
I thought it was what it does on the lower time frame to get more confirmation.
Not the confirmation. Where did I say you what when I pulled remember I said let's pull out some Geminucci's. When I was like, let's pull out the Geminucci's and see, cause you know you be running the Geminucci's to get your power of 3. And I said you want to get the Geminucci's and then you want to run the Geminucci's and you probably want to see what, right? We pulled out the fib, we ran the fib there, right? And the fib was here and we said you want to see it do what? Y'all don't remember? That's okay. I be saying a lot. But
Yeah, too many things to remember.
yeah, too many things to remember. But let me go. I'm gonna go here because I don't want to just say that I said. I wanted to see if one of y'all could confirm it because you know y'all know how it is when we be on live, and sometimes we be getting some haters come in, right? And I just be wanting somebody else to confirm it before, because they gonna say, oh, you gonna say that you said that, you know what I'm saying? But I be wanting to get y'all to confirm it before I So we're gonna come over here. And we're gonna see if we can find it real quick. Tape reading session for 224. Okay. How do I just get to it? There you go. Now let's see if we can find it. Hey Siri, what's the temperature? Can y'all
to a rejection block?
do y'all hear anything? Do y'all hear me talking on that? Can y'all not hear that sound?
Move.
On
Let's
YouTube.
see if we continue
I can hear it on Discord.
Yeah, I know y'all can hear it, but YouTube.
Chop some more.
Can y'all hear that on? Can y'all hear that sound? YouTube.
Up until we went above midnight, right? Took out minor buy side, traded up into the rejection block, failing to get to the buy side liquidity from the London
YouTube.
high.
Y'all not talking to me?
And then we've come back down and created inversion fair value gap with a SIBI. All right, so watching this SIBI here, if we do trade back to it, it's a slight expansion candle, so you want to see it not trade to it at all. But if we do,
oh y'all hear it on YouTube,
25% because it's showing bearish signatures.
All right, thank you.
Of creating an inversion fair value gap after engaging with minor buy side.
All right, let's see if we can find it. Let's see if we can find it.
And the 932 candle, so that we can do that.
With the 931. The 9 candle can't be because let me show you what I'm talking about. Gap is going to be there when you go back to. Right, we came down below the sell side.
I think that's what I'm reviewing.
That's the first sell.
Oh, and she said one last question.
To switch gears and to talk about twins and all that right there. That's all
she
I got.
She said one last question.
Up close candle over there, right? We said, what does that mean? That's bearish order flow. They don't even use. We've come down and engineered sell side. You're paying double. You see what I'm saying?
Talking about the what's the name?
Actual fair value gap. You can't use that 930 candle because something for me to trade off of, and if it's still worth me taking it to this sell side.
Okay, here you go, right here.
Engage like to say we come to like a 5 minute, right, and then we reclaim. If we reclaim this SIBI here, I get short off of that fair. So far, I just needed to give me more information, right? I just needed to give me more information before I try to re-engage. But if you're watching it on a higher time frame, right, on a higher time frame, and you're just looking at this as being like maybe an institutional order flow entry drill, and you just want to get short there, or like I say, you may be looking at, okay, now that I have my fair value gap, I needed to come back up into a premium of my range, right? I needed to come back up at least to equilibrium right, or into a premium of my range before I get short off of that fair value gap. And since this premium here, you may say, okay, if it do come back into a premium, we got a prior low right there and a new week opening gap. So I'll be looking to get short around this area right here because I know we got a prior low there. So it's going to be a breaker or a mitigation block over there somewhere. And then we got a new week opening gap. So I'm going to wait for it to come near before I get short to engage.
I'm going to wait for it.
This right here. That's going to.
Right? I'm going to wait till it come near. Right? I want to come back to a premium. I know we got a prior low right there. Y'all heard it, right? Y'all heard it, right? There we go right there. This right here. If I make this really big there. Right? And let me see, how can I blow this up? All right. Make that really big. Come back.
They'll be over here.
If you look down in the corner, right down there,
I was looking to do
you'll see
that's just
it says
personal style on the lower tier there on a, so
1022
a civvy there on a 1 minute, right?
1022.
That's just my personal style.
In the morning, right there.
Right, I just need to get watching it on a higher time frame.
Right there, 10:22 a.m.
Time frame.
Right, you see that?
10:22
right here in the corner.
Institutional order flow.
That's me up there talking.
Want to get short there.
Right
Well,
at
like
10:22 a.m.
Okay.
And I says you
my
run the
fair value.
Fibonacci
I needed to come back up into a premium.
into a premium of the range.
Right? I need to come back up at least to equilibrium.
At least equilibrium.
Right? Or into a premium of
my
range before I get short off of that fair value gap. And since this premium here, you may say, okay, if it do come back into a premium, we got a prior low right there and a new week opening gap. So I'll be looking to get short around this area right here because I know we got a prior low there. So it's going to be a breaker or a mitigation block over there somewhere. And then we got a new week opening gap. So I'm going to wait for it to come near before I get short to engage this right here. That's going to give me what I want as far as the risk to reward.
That's going to give me what I want as far as risk to reward. I'm going to wait till it come back there to get short there and engage that right there. Now, zoom back out to 100%. Move this out of the way.
You know what I'm saying?
Pause that. All right, get out my way. All right, you're out of my way. And then we come back here, and now we put the meat back. Now, for those who don't know, we was talking about what? God dog it. Come here. Right? For those who don't know, we were talking about coming when price formed this fair value gap right here. She said, hey, will that be considered the first yes, it's the first presentation on the 15-minute. Explained why that was. Then we said, now that we have our range, let me move all this other stuff over here. Right? Move all this other stuff. Oh, I got a bunch of stuff on here. Golly. I got a whole heap of stuff. Want that to stay. Want that to stay. All right, we can leave that right there. Oh, we need that. We need that weekly, right? We need all of that because we was talking about that, right? So we said want to come back into a premium, right? Either you know what I'm saying, you could be a type of person that's looking for an institutional order flow entry drill, but we said, you say now that we got my fair value gap, I need to come back at least to equilibrium or into a premium. And if it comes into a premium, you notice that, hey, we have a prior low right here. Prior lows are what? Prior lows are what? Prior lows can be what? Premium or discount what? Right? Premium or discount what?
PD arrays.
PD arrays, right? Tim, how can a prior low be a premium PD array? Easy. Somebody explain how a prior low can be a premium PD array. How can a prior low be a premium PD array when it resides where? Huh? When it resides where? Somebody tell me. Y'all need some help? When price resides below it, above price. Yes, very good. Shout out everybody. Shout out Randa Green. pulling up with the hard hitting answers. Right? And who's that said about the PDub rate? Somebody, I heard somebody say that. Right? So when it resides above price, okay? So we wanted to come back and we said in the premium, right? In the premium of our move, what was the significant points of interest? People like to use fancy terms. What was the significant point of interest in the premium at that time? The significant point of interest was a prior low, right? Which was the previous day's low, right? We had a previous day's low. That's a prior low. That's an old low, right? And we had a new week opening gap, right? So we said we want to look to get short here at this prior low. Why? Are we looking to get short there? Because we said if it comes back into a premium, now we're running into a prior low, and it's going to be either a mitigation block or a breaker over there, because it's a prior low that we've traded below. So we know that it's going to be a mitigation block or a breaker over there somewhere in price. So we're looking to get short off of that to come down and engage this. Why are we looking for it to engage this? Because that was the sell side we was targeting, and we came down here and we did what? We engineered liquidity. Y'all heard me talk about that in the video too. I heard it play just a snippet of it. I was saying we came down here and engineered liquidity. And when the algorithm engineers liquidity, what does that mean? Right? When it comes very close to a low or high and then backs off of it, what does that mean? Somebody in the gang, somebody tell me, what does that mean when price comes very close to a low or high and then backs off of it? What does that mean? It's doing what?
It wants to go there, but not yet.
Not yet. And so if it engineers it, it's going to do what? It's going to go back and it's going to, what it's going to do? It's going to go back and do what? What do we like to say? We say it's just going back to handle some kind of business, and then do what? Once it go back and handle this business, what is it gonna do? Come on, Jim. It was a movie with the killer tomatoes. I know you remember that. Come on.
Attack liquidity.
Attack that liquidity. Y'all don't remember Attack of the Killer Tomatoes? Y'all don't remember that? shout out Run the Green with Take Out the Liquidity. Right? Where it is engineering the liquidity, and when it backs off of it, it's saying, I want to go there, but not just yet. I got to go back and handle some business. And when I go back and handle, and 9 times out of 10, the business is just coming back so that smart money can get on the bus and then attack that liquidity that it just engineered. The same concept when it comes to market maker models, right? You engineer some liquidity, you manipulate price away from it, handle some business, then you come back and attack that liquidity that you engineered, right? Same concept. Whenever the market engineers liquidity, right? Don't get upset. Don't say, oh man, it didn't hit my target, right? Because if you haven't completed a mission, it's just engineering liquidity because now what when it get right here and start backing off right there, what is retail seeing this as? What does retail call this right here? What does retail call that? Somebody tell me what retail call it.
Support.
Besides support. It start with a D.
It's like a double bottom.
Double bottom, right? It is support. You're right with saying that's support. They're saying, oh, that's strong support, right? And what makes it strong support? Because price, it was once resistance, then it became support, then it didn't really become resistance because it barely got, well, it did get below it, but then we got back above it and it was support, came here, it was support, didn't get down to it there, then got here, it was support, bounced back up, right? So yes, you're right when saying retail sees it as support, right? But when you look at it like this right here, it just formed the double bottom, right? And why you say it formed the double bottom? Because there's a lot of time in between these two right here, right? Some would even venture to say a triple bottom because of this little area there. But since since we dip below it here, right, we've already poked into that. But then we got all this time in between there, and we can't go through. Now that's a double bottom because we got a bunch of time in between there, right? We couldn't make it there, then we came here, and then we rejected off of it. So now retail seeing that as a double bottom, right? So now they're saying, oh yeah, we're not coming back down through that, right? We're not going back down. We just formed a double bottom. But this is the time when we're chomping at the bit, looking at that as being a target, because we started out the morning saying, I want to see price trade down to here, at least there, preferably taking that out because of whatever. We're not going to go back through all of that from the tape reading video, but that's what we were looking for from the beginning. We didn't want to see price trading back up into this area, right? We're not going to go back through that, right? We didn't want to see price come back up here for a reason stated based off of how price traded Friday, right? And marked out the buy side and the sell side. And then we got the Judas swing, came down, boom, nice delivery. Then we talked about, hey, now that we got our 15-minute fair value gap, if you didn't get an opportunity to participate on the lower time frames on the 15-minute, now you're just going to trust your process. If your analysis says short off of an institutional order flow entry drill, you do that. But if you're in the mind frame of, hey, I got my 15-minute, now I want to come back into a premium, I want to get short at this prior low right there to engage that low right there, and then we put the meat back on the bone. Oh my goodness. Are my eyes deceiving me? Are my eyes deceiving me? My eyes are not deceiving me, are they? Can anybody tell me what did price do? What did price do? Can anybody tell me what price did? Did price go back to that prior low right there in the premium of this move right there, and then come back and engage that liquidity right there? Did price do that? Am I tripping? Can anybody else see that besides me? If you can see that, please put a 1 in the chat or say yes or do something. Can you see that?
I see that, Tim, and I also got it as a new week opening gap for 224.
Yes, right there. It touched the new week opening gap too. It touched both of them. Remember we did prior low and new week opening gap for 224. How can two people in two different states have the same thing marked out as a new week opening gap for 224.25? How is that possible? What moves the market is buying and selling pressure. Why would two people in two different places have something marked out as a new week opening gap? Right there, name it the same thing, date it the same thing, and then price comes right back. Let's zoom in on this right here. Let's zoom. And sometimes you gotta poke the bear. Right? I wanted to come back here and I want to get short off of that right there. Oh, that happened. Gave me an opportunity to get short, right? I took a little bit of heat there. But then, if you look there, I wanted to get short off of the new week opening gap. Oh, that happened right there. Barely took any heat. There, if you was of the mind frame of getting short there, you barely took any heat, right? All in all, you're still safe because you can choose where to put your what's the name? You have your mandatory, you have your safe, and you have your aggressive stops. So you can choose where to put your stop, right? Mandatory, safe, and aggressive, right? Wherever you want to put it for stop placement. But you were safe in either entry. And then guess what? Like Michael says, deliver like gangbusters. Oh my goodness. This stuff freaking works. It freaking works. Do y'all realize it's somebody on Al Gore's internet charging you $19.95 for this? Somebody on Al Gore's internet charges you $19.95 for this, right? And then it's other people on Al Gore's internet charging you $5,000 for this. What's up, Felicia? What's going on? Felicia, I ain't seen you in a month of Sundays. What's up, Father Legends? What's going on, man? Who else? E-Rock. E-Rock done pulled up in here. What's going on? Okay, we got Marie Lisbon up in here. Shout out Marie Lisbon. Marie, if this ain't first time showing up, I'm jolly positive, but that's my first time ever seeing the name. So welcome. We got XMT89 up in here. Welcome. If this ain't your first time, I jolly pies, but welcome. Thank you for pulling up and hanging out with us. And did I see somebody else popping it? What's up? Lump popped in the Discord. I can. Hines. Everybody popping up in the Discord. What's going on, man? How y'all doing? Hey. How y'all doing? All right. Now, I just want to put that out there. When I opened up the chart, that's the first thing I saw. That's the first thing I saw that we had done exactly. Price had done exactly what we spoke about this morning, right? And I just wanted to poke the bear a little bit. Because people always, they like to come to my videos and be messing with me because I trade ICT concepts, but who am I? I'm just some 52-year-old dude who like to go to Sam's Club in the middle of the day and eat pizza and drink soda and people watch. All right, so this morning price opened up, last night should I say, price opened up over here. We already pretty much talked about what price did today in the middle of me poking the bear, but let's go down to a 5-minute time frame to look at a little more detail. All right, because a lot of people don't trade on the 1 minute, so we'll go to a 5-minute time frame and look at it in a little more detail. Okay, so price opened up far over here. We had a premium gap up. I think it was it was 60 something on the new day. On the opening range gap. This one right here was like a 40 something point. I think Jim told us, right? Jim told us that, yes, 40 and 3/4 points. Your eyeballs are working good and your math is working good, Jim, because Jim did that in his head. Me, on the other hand, I used the info line, right? So we had a 40-point gap up for our new week opening gap. All right, and then we traded up into a prior new week opening gap. Right, traded up into a prior new week opening gap. Then we pulled back, taking out the minor sell side here. Traded down, took out the minor sell side. Then we traded back up to the lower end of the new week opening gap. And we hung out there until midnight. At midnight, we took out the buy side, minor buy side, dropping down, coming all the way back down to the new week opening gap, repricing this Bessie. Okay, coming back down to the new week opening gap, and then at making the London low, right, around 315, 320. Around 315, 320. Then price displaced away, right, taking out the buy side, creating the London high, right, around 420, 425 a.m. Traded back down into the range, into the discount of the range. Just kind of hung out around midnight in the low of that new week opening gap, right? And if you run a Fibonacci on that new week opening gap from the 27th of January, the week of the 27th of January, right? If you run a Fibonacci on that, what do we want to see on any PD array if price is exceedingly bearish? What do we want to see? And I don't care what the PD array is. What do we want to see on any PD array if price is exceedingly bearish? Somebody tell me. What do we want to see?
For it to go to the premium and come back down to the low?
No, like when you trade to it. When you're trading into it, what do you want to see price do? You want to see price respect what? Any PD array
25%.
Yes. If price is exceedingly bearish, you want to see it respect that 25%. Right, and if you look there, the entire time we was trading into that new week opening gap, right, we was respecting that lower quadrant, that lower 25% right there, right? That lower 25%, we was respecting that all night long. We're respecting that all night long. Okay, so it was showing you that price was respecting the 25% of that new week opening gap. All right. And then so at the New York Open, all right, so we came over here to the New York Open. I don't know if y'all can see it there. There's a little, all right, if I come here. I don't know why they're showing on my 5-minute chart, but that's my first presentation fair value gap on the 1 minute. That shouldn't even be showing on my 5-minute chart, but that's the first presentation on the 1 minute because we opened up here on the 9:30 candle there. So inside this 9:30 5-minute candle, we created a first presentation fair value gap. But as we traded up on this 9:30 candle right here, right? If you look and see, we had the buy side marked out there, and we had the sell side marked out there. That was our current dealing range that we were watching, right? Right? What makes that the current dealing range that we were watching? Anybody care to explain why this was the current dealing range? What made it a dealing range, right? What makes this the current dealing range that we're watching right here? Gang, which one of y'all want to take a stab at it? What makes this the current dealing range that we're watching when price opens up right here at 9:30?
Is it because there's liquidity taken both high and low?
Yes, this is the lowest low and the highest high that took liquidity since prior to price opening right there. So when price opened at 9:30 there, right, if we come back in time, that's the highest high and that's the lowest low that has swept liquidity. So that's the current dealing range that price is in, right? So the 9:30 opening price resides here, right? And it's in between this low and this high, and that's the lowest low and highest high that has swept liquidity prior to this happening right there, right? So we're watching this dealing range right here, right? And so on the 9:30 open here, right there, price traded up here, right, and traded into there. What did we say price traded up to right there this morning? Right, we said price traded up into what? What PD array is that price traded up into?
Rejection block.
Rejection block, right? So price traded up into a rejection block. It's a rejection block on the 5-minute. It's a rejection block on the 1 minute. It might be one on the 15-minute. Let me see. We were watching it on the 1 minute, right? And it's a rejection block on the 15-minute also. So you got a rejection block on the 1 minute, the 5-minute, and the 15-minute. For those who don't know what a rejection block is, you got equal body candles with long wicks, right? The rejection block would be from the highest body to the highest high, right? And if it was a bearish, it was on the bottom end. So this would be a bearish. If it was a bullish rejection block, it would be the lowest body to the lowest low, right? So from the highest body to the highest high, traded into that rejection block and then got a nice reaction off of it. And once we got that reaction off of that rejection block, we came down and we on the 1 minute time frame, we created an inversion fair value gap of the first presentation fair value gap. So being that anybody who wants to trade Michael's, I'll just call it the 2025 model, his 2025 model involved using the first presentation fair value gap for trade setups, right? So in the indication, in the instance as we were today, when we were desiring lower prices, right? We were desiring lower prices, okay? We made our argument for why we did not want to see price trade back up into this range, right? Even though we had a huge imbalance. Remember we talked about, Jim, you did a good job on the chart prep last night, and you was talking about this huge imbalance right here, and we made an argument for why we did not want to see that happen. Okay, we got all our arguments in place, and all of our arguments are leaning toward bearish. Right? And so since all the algorithmic arguments are leaning toward bearish, we're looking for lower prices into this sell side down here, right? Because when we first started the tape reading, what did we say we want to see be engaged before any attempt of trying to go back up, right? What did we say we want to see engaged? Tish, Jim, what did we say we want to see engaged before price go back up? Was it this over here? Was it that sell side? Hey, this Tish. Yeah, it was that sell side. Yeah, this Tish, a.k.a. Honey. It was that sell side. All right, appreciate that, Tish. I mean, Honey. So, we was looking for lower prices, right? And now, since we're looking for lower prices, not just because we want lower prices, we're looking for lower prices because of the algorithmic signatures when the first presentation fair value gap, right? When the first presentation fair value gap is formed, right? When the first presentation fair value gap is formed right here, okay? You say, Tim, that says first, that we're going to get to that in a minute. All right, so when the first presentation fair value gap is formed and it's a bullish first presentation fair value gap, right? What do you want to wait to see happen to this right here? Help me out. Somebody help me out. What do you want to see if it's a bullish first presentation fair value gap and you're looking for lower prices based off of algorithmic signatures? What do you want to see happen right there before trying to use that?
You want to see it get inversed?
Yes, you want to see it become an inversion fair value gap. Very good. Shout out Jim pulling up with the hard hitting answers, man. Where my soundboard at? All right, you want to see it become an inversion fair value gap. Boom. We come down, we get that inversion fair value gap right here on that 933 candle. It gives us our inversion fair value gap there. That supports the bearish idea, right? We got a rejection. This is the 1 minute rejection block. When we said it was a 1 minute, 5 minute, 15 minute rejection block, right? Hit that 1 minute rejection block. Nice rejection off of it. Melt it down. Inversion fair value gap. Boom. Very good. So now we've melted down and got that inversion fair value gap. Not only do we got an inversion fair value gap, right? Once we trade down, we offer this price over here. We now have a potential breaker. Why? Because we came down and we offered price below that opening price right there. This right here dropped down, offered that price. You got a potential breaker, trade back into that potential breaker, melt down, right? Get below the low of it, trade back up into it once again, melt down, right? So you don't have to close below anything. If the algorithm is being the algorithm, when it offers the price, you can use it. You can use it, right? You don't have to close. You can use it, okay? And when it's exceedingly bearish, a lot of times you're not going to get that retracement. There's nothing wrong with not getting the retracement. If your model says wait for it to trade back to the first presentation, you did not get that setup today. Why didn't you get that setup today on the 1 minute? Let's go see. Because now that brings us to that second thing that said first of session that y'all was wondering about. Hey, Tim, why does that say first of session if you're saying that green one was your first of session, right? If I go here, let me go back to 1 minute for 1 second because it's not showing like it's supposed to be, right? It's not showing like it's supposed to be. Let's put this on all. I'll just come here, visibility, put that on 5, there you go. All right, now let's go back to the 5 minute. Now, looky who stole the freaking cookie. Now, that is why you did not get your retracement back to your first presentation fair value gap. Why is that? Can somebody explain to me why, just looking at what price did, right? This is where the first presentation fair value gap resides, right? This is where the first presentation fair value gap resides. So when we come down here and create this city, right, we trade it back up into the first presentation on the 5 minute time frame. But Tim, it didn't trade back up to the first presentation of the 1 minute, right? Somebody give me 2 clear reasons why price did not trade back up there. What's the first and most obvious one? Come
Is it
on.
because you can't count the 9:30 candle?
No, that's not it. Because this is the 1 minute. This is the 1 minute. So that's a true first presentation fair value gap. But it's a whole lot simpler than that. You ain't got to know anything about the, you know what I'm saying, about that first presentation, right? This is just a BISI and a SIBI. We got an inversion fair value gap and a bearish fair value gap. But just looking at this 5 minute time frame, right? One, what's the most obvious right here, right? This 925 candle, right, starts off the narrative for you. Let me draw it out like this right here. All right. Are the bells clicking? Are the bells clicking yet? Do you see it yet? Did you get it yet? Get it yet? Get it yet? Ooh, my secret. Oh! It ain't ringing bells for you yet? What did this 925 candle do? It closed doing what?
Macro?
We talked about this earlier on the live stream. We talked about it earlier. It wasn't on the 5 minute time frame. It was on a lower time frame, but we talked about it earlier. What this 925 candle close with the possibility of? All right, not an expansion candle. What did this 925 candle? It closed with the possibility of what? What did I draw out? I just drew it out. Come on now. Come on now. Come on now. What did it close with the possibility of creating?
Well, it could have created a fair value gap.
There you go. It could have created a fair value gap. But what did the 930 candle do? The 930
It immediately rebalanced it.
It traded back up, overlapping this candle, right? And then it came down and closed. And then so now that it overlapped that candle, we're looking for that to see if that's going to be a what? Immediate rebalance, right? And does this 935 candle confirm that that's an immediate rebalance? Yes or no? Right? Does the 935 candle confirm that this candle was an immediate rebalance?
Yes, because it left the area.
Yes, because it left the area. And not only did it leave the area, it came down and engaged our first piece of sell side from the entire range that we was watching. We had this sell side, right? We had that sell side, and we had that sell side. Not to mention the daily sell side and weekly sell side, right? So we came down and engaged that first piece of sell side, right? Since we engaged that first piece of sell side, right? That's the algorithm letting us know that, yes, I am very bearish. I am in a hurry to get somewhere. Right? Why? Because we created an immediate rebalance and we got up out of there. Right? So now when we create an immediate rebalance, right? Then we created a SIBI. Right? This candle closed with the possibility of making a SIBI this big. Right? The next candle was a retracement candle. So we end up making a SIBI that big. So now we have a 5 minute SIBI with a 1 minute inversion fair value gap resting above it. Now this is the second reason. The first reason, the obvious one, was that we had just got an immediate rebalance, right? We was look, hey, is this immediate rebalance? Yes, it is. We got out of there. So since we get an immediate rebalance, that means that price is in a hurry to go. We don't want to see it take this liquidity and come all the way back up here, because you just said, I'm in a hurry to go, right? So since you're in a hurry to go and you have a 1 minute inversion fair value gap resting above a 5 minute bearish fair value gap, that lowers the probability of price trading back to that 1 minute fair value gap. Oh my freaking goodness. Oh my goodness. This, y'all better let him cook. If this is not good, a woodpecker don't peck wood. Oh my goodness. I think I need to stop right here before they ban me from the internet. They gonna ban me from the internet for this. I'm talking my talk today. We be acting humble every day. Every day. And they want to come leave their little funny comments on the videos. They want to make their little slick comments when I be in other chat rooms. They want to poke their little jabs. But who? Can I get up and do McKendrick? Mustard on the beat, ho. Mustard on the beat, ho. Okay, so we traded back up into the first presentation fair value gap from the 5-minute time frame, right? And this is a quick lesson and another portion of the fractal. Sometimes you gotta pop out and show. I'm the one that up the scope. This is another example of the fractal nature of price. It's not the time horizon fractal nature of it. It's the time frame fractal nature of it. Today was a beautiful day showing the fractal nature of price, meaning, right? We had a 1 minute inversion fair value gap as a first presentation fair value gap. We had a 5-minute bearish fair value gap that price used as resistance. And then we had a 15-minute first presentation fair value gap that price used as resistance, right? And if you notice, when we created our 5-minute, right, price, the algorithm used the 5-minute, never made it back to the 1. When we had our 15-minute, the algorithm used the 15-minute, never made it back to the 5, right? That's why when we was discussing this 15-minute first presentation, right, we said we want to see price come down, right? Wherever the low was, I think this was the low at that time right there. Yes. We said we want to see price come back into a premium, and we will be looking to sell here. Why? Because this was the first presentation fair value gap, had confluence of a prior day low and a mitigation block or breaker over there somewhere, and confluence of a new week opening gap. All at the 15-minute first presentation, so you would not want to see price make it back to that 5 or dig too far back up to that 1, because that would be high resistance. In low resistance liquidity runs, you want to see price do its thing and go, right? And that's it. That's all I got, man. Went back to the 15-minute first presentation and then delivered to the sell side, right? So over here in the morning was your opportunity to participate on lower time frames, and then over here in the afternoon was your opportunity to participate based off of the 15-minute, or maybe let's even look at the 60. Was it any opportunity at the 60? No 60-minute opportunity. So 15-minute opportunity in the afternoon, right? Based off the 15-minute time frame. And that's all I got, man. Y'all got anything for me? Y'all ' This the time when the other chats be putting gems in the chat. Y'all supposed to be putting gems in the chat right now. Y'all gotta put gems in the chat. I'm sweating. That boy was cooking. I think I was cooking. Was I cooking? Did I do a good job? Did y'all learn anything out of this? Did this make any sense? Huh? Did this make any sense?
Yes.
Yes, and yes. My bad. My bad. Hey, shout out to person. Somebody came in the other day and did a super chat. I saw it right as I was closing out the thing. I jollipies to that person. I can't remember their name right now, but they had did a super chat in the chat. It was I think it was like the first time coming, and they had dropped the super chat, and I appreciate it. It was like right when I was closing out. It was the other, and I think it might have been Friday night. Yeah, because I know it was at nighttime. Right? That's all I got. I got a one-on-one at 8 o'clock. So if ain't nobody got nothing, we're going to go ahead and wrap it up. Do anybody got anything? All hearts and minds clear? Any questions? All right. Highs,
So
Vernon, Jim, Sugar.
if we go on the daily chart, we're still bullish. Is that right?
Yes, we haven't changed anything on the daily chart. We had our invalidation levels, right? We had our invalidation levels for everything. This daily time frame here, right? Coming here, we said it was warranted because we had this weekly reclaimed fair value gap that we could trade back down into. So coming down here was warranted, right? So we haven't invalidated anything on the daily because inside our daily dealing range, like the last dealing range that we was dealing with from this low up to that high, right? This is just internal liquidity, right? That's just internal liquidity coming from this low here, right? And then going all the way back up to that high there, right? Because this low came down and swept out liquidity, right? And then we made all this move here and we came up and swept out liquidity. So for this dealing range there, we've just moved back down into a discount, taking out internal liquidity, right? So nothing has changed as far as the bullish nature of the daily time frame. Anytime you see the a time frame showing signs of switching from a buy program to a sell program, you always want to find out on the higher time frame above it, is there a reason for it to come there, right? And if it is, you have to allow for that. Now, that doesn't mean that we can't keep going, but you have to allow for this because you got this weekly PD array down here that you anticipate in price to trade back to, and that would be your reclaimed fair value gap here on the weekly time frame, right? Because this is your reclaimed fair value gap. We've been respecting this reclaimed fair value gap. I'm sorry, for what we said 6 weeks. We've been respecting this for 6 weeks, okay? And now that we got a closure up here above it, right? We're anticipating a retracement back to it to use it, right? We've reclaimed it. Right now, we're anticipating a move back to use it. Now that we've moved back to it here, now we're waiting for this weekly candle to see how this weekly candle closes in reference to that reclaimed fair value gap. So since we anticipate in price to come back to that on the weekly time frame, right? And then this same dealing range there on the weekly, right? Came down, took out that low, pushed up, took out that high, right? Same little dealing range. We've come back down to a discount, taking out that liquidity there, right? And we anticipated doing that because we want to see the daily time frame come down and take out this liquidity, right? Because we was looking for that retracement back. We traded above this high, anticipating a deeper retracement. The deeper retracement stopping above this liquidity right here. We talked about that this morning. Stopping here, that didn't satisfy a deep retracement, right? Because we took out this high, so we anticipate a deeper retracement. Now that we've retraced and taken out sell side, now we want to see it, the bullishness return in the daily time frame, right? And will we get that? I don't know, because look how we traded over here before. Just we consolidated in here. How long we been in this range? Let's see, from this candle all the way over to now, 44 trading days, 68 calendar days. Right, we've been in this range. We've been in this range for 68 calendar days, 44 trading days. Right, what's 68 calendar days? That's like over 2 months. Right, yeah, that's over 2 months. Oh man, I ain't been sharing my charts the whole time. Well,
yeah,
I won't be.
I can see the chart.
Yeah, you in the Discord. I won't be saying that again. I won't be saying that again. I promise you. I promise you I won't be saying all that no more.
The chat isn't showing.
You say what? Who was that, Jada? What you said, Jada? Was that Jada? Who was that?
Oh, hi. Sorry, we couldn't see the chat for the daily.
Oh yeah, I just saw it in the chat. Wells J Rock say I ran to the Discord. Yep. Well, sorry, I wasn't sharing the chart, but yeah, there you go. We still, it don't change anything. You would want, you know what I'm saying? You would want to see, for me, right? For me to switch me to being bearish on the daily time frame, right?
I would need to see price come down here, right? Come down here, take out that liquidity there, right? And start to respect bearish PD arrays, right? On the daily, right? That's what I would need for me to switch bearish on a daily time frame. Right? I would need that for me to switch bearish on a daily time frame, because when you think about how price can trade, if we go back to OG OTE, right? If we go back to OG OTE, this was like the flagship that everybody wanted to trade back in the day, right? We are almost at the closest OTE right now, poking outside the low of this is reclaimed fair value gap right there at 21,311.75 will give you the first touch of OTE, right? And then 21,181.75 will give you the optimum entry for the OTE, and then 21,035 will give you the best entry for OTE, right? So that's why I say it would need to come down here and engage this liquidity, and then start to respect premium PD arrays for me to turn bullish on the daily time frame. That right there is my invalidation point for the bullishness for my own personal trading style. Right? Because in the sense of retracements, we can come all the way down here and still only be coming back for a deep OTE setup. Right? We can come all the way down here and set up a SMT, right, where the other indices take this low, this one don't take the low, and then we reverse and go back up, right? So many scenarios that can play out, but that right there, you always want to have an invalidation point, right? And my invalidation point may not be your invalidation point, right? But when I'm looking at a daily chart, I'm thinking longer horizon, right? I'm thinking longer horizon, because as y'all know, like I said this morning, right, on the live, I said just because I'm looking for it to come here don't mean that I'm not looking to trade with the higher time frame narrative of being bullish. If I'm trading with the higher time frame, I'm looking for a reason to buy, right? But just because I wanted to come to the sell side don't mean that I'm bearish. I'm just looking for a reason to buy, and I want it to come down here to give me a reason to buy. But since I'm looking for it to come here, I can use what I know to take advantage of the short, because why? I'm not a bull, I'm not a bear, I'm a beast. Yeah, man. So, did that answer your question, Jim?
Yes, it did.
All right. Anybody else got anything? I guess that is the advantage in joining your membership. Us poor folk got to wait. You ain't got to wait for nothing, because we be here every day at 6. So you ain't got to wait. We be right here doing the same thing every day. The only advantage of joining signing up for the Discord is that, you know, I do Q&As, I do random pop-ups, I go into a lot more detail, you know what I'm saying, because people tend to ask more questions when we're in the Discord. I don't know, when we out here on YouTube, they tend to be a little quiet, like they be bashful, like somebody can see their face. All right. So, yeah, you ain't got to join up. I promise you, I never tell people they need to join the Discord to for me to share any of my knowledge with them. Right? It's never been a money grab for me. I pop out on Al Gore's internet and I share my thoughts on. You see what we went through today? This was a freaking master class. Was this not a master class? If you missed the little gems inside there, I mean, you just, if you go back and look at my videos, look here, Ron, I'm going to help you out right now, Ron. If you go back and you look at my videos, let me get me is that my phone? All right, y'all got to hold on for a second. Where's my mute?
I think you're still muted.
See me. Y'all couldn't see me on the Discord, but I was on the phone. Calendra had called me, and I was on the phone. That's why I muted. But Ron, Ron. If you go to my YouTube page, right, I have a section. I have a playlist called the Art of Read and Price section. Let me go to my channel. All right, if you go to my YouTube page, right, I have a section called Tim's Tidbits to Dinner. Where's my? That's the promo. That's the boot camp promo. Where is it? Overnight price section. Why is it not showing up? Did we not go through this? Boot camp. We went through this one time before. And didn't we go through this one time before? When I went through and like figured out how to. Oh, I'm on the home page. Okay, there you go, playlist. I'm like, I know we went through this right here. Go to my YouTube page, go to playlist. I wasn't on playlist, I'm sorry. Right here, it says the Art of Read and Price action. Right? If you go to that playlist right here and look through all of these videos right here, the Art of Read and Price section, right there. So it starts out with lingo, open, high, low, close, swing points, order blocks, fair value gaps, 1, 2, and 3, displacement, internal, external liquidity, how to study price, breakers, mitigation blocks, if the delivery, order flow 1 and 2, market maker models 1, 2, and 3, power of 3, and then how to master your ICT entry model, right? If you look at that playlist right there, right, you will understand all the lingo we used tonight. You'll understand everything we was talking about tonight. And then after you watch these right here, you stay tapped in with us whenever we're doing the price action recaps, then you will understand everything we're talking about, and you will be well on your way to mastering the ICT concepts without even having to join the Discord, right? Right there, because it's all here. The only thing is, being in the Discord, you get more access to get personalized questions answered. You get access to the random pop-ups and stuff like that. It's just more access to the mentor / teacher or whatever you want to call me. Bo, do you talk about trading psychology? The answer to trading psychology is understanding. Somebody tell me what's the sine qua non of trading? Somebody in the gang. Tell Bo what's the sine qua non of trading, right? Everybody put this great emphasis on, oh, my trading psychology is messed up. Oh, no. What's the sine qua non of trading? Understanding what? Understanding what? Tell Bo what the sine qua non of trading is. Understanding what? Order flow and
price action.
Yes, order flow and price
Delivery.
Very good. If you understand order flow and price delivery, then you will be very comfortable with your model, right? If you are very comfortable with your model, right, you will not fear missing a move, right? If you are very comfortable with how order flow and price delivery works, right? For example of today, okay? Today as an example, right? if you are very comfortable with delivery and order flow, remember this morning when we talked about it, we said this move here, when price was over here like this, right? We said that this move here was your opportunity to participate on the lower time frame, right? It's your opportunity to participate on the lower time frame. But if you're watching it on the 15-minute, then you would want price to come back to the premium, at least equilibrium, and you would want to get short at this old prior low or this new week opening gap, right? So there's no fear of missing out. Oh, I missed the move. Oh, I've missed the move. I got FOMO. Oh my goodness, I got FOMO. No, because you understand price delivery. You understand order flow. You understand that price has come down and engineered sell side liquidity. Right? Tim, what do you mean? We traded very close to the target and we backed up off of it. We're creating a false double bottom for retail, right? Why do we create that false double bottom, right? We pulled back up so that smart money can participate in the move, right? When we got this move right here, what was that move? That move was our expansion, right? What did that expansion come afterwards, right? That expansion came after our revert. You see what I'm saying? What do we do here? We consolidated right there. Somebody tell me, what move is this? What move is this playing out? What move is this playing out right here? Price, it's two ways price gonna deliver, right? It's two ways price gonna deliver. Right?
Third.
There you go. All right, let me spell it right. All right, we got this way, and then we got this way. Right? And for those who don't know, that's consolidation, expansion, retracement, and deliver. That's consolidation, expansion, reversal, retracement, and deliver. Okay? So this is curd and that's surd. Or however which I can't remember. Yeah, I think that's curd and that's surd. Yeah. Or curd and curword. However you want to say it, right? So we got what we got here. Consolidation. Oh, we can start here. Consolidation. Right there. Consolidation, expansion, reversal. So if price does this, somebody finish that off for me. If price does this,
Then it should do that.
then it should do that. Right? Now let's see. Let's see here. Right? We was having a beautiful algorithmic day. Right? This is our target right here. Let's put a little trampoline down here. That's our target. And we said if price does this, then it should do that. Did it do that? Let's see. Ding, 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 ding. Right? So, if you understand order flow and price delivery, I don't care how many books you read, it will not help you with your trading psychology until you understand order flow and price delivery. Once you understand order flow and price delivery, then you can formulate a way to engage with the market, right? You can choose to have one model. You can choose to have two models. You can choose to be a discretionary trader who's going to just trade what's in front of you based off of price action. But you would no longer fear, oh, if I get in here, I'm going to get stopped out. Oh, if I don't do something now, I'm going to miss the move. Oh, I have to chase it. All of that will be gone because you have full confidence in understanding this is how order flow and price delivery works. This is my method of entering. If it doesn't give me my method of entering, there's no trade for me. If it gives me my method of entering, I enter, right? I'm not fearing missing the move. That's what's going to help you with your trading psychology. All right? All right? That's good, Bo. You good on that, Bo? Make sense? Makes sense, Bo. Bo, it look like your thing say that God is good. Yes, it is. God is good and my wife is amazing. That's what I always tell people. You good on that, Bo? Who crashing out? Somebody crashing out? Yes, time and price is very important to price. Price action. Time and price is very important to price action. When time meets price, whoo, some beautiful magic happens. Some beautiful magic happens. There are very specific time elements for intraday trading that will just take your trading to the next level. Right? Next level. Right, go through the art of price action, art of reading price action playlist. We talk about all that. If you want it straight from the horse's mouth, go to Michael J. Huddleston YouTube page and look at his core content. After you watch his core content, all 12 months of it, look at his 2022 mentorship, his 2023 mentorship, his 2024 mentorship, and then join his Telegram channel and start tapping in for his 2025 lectureship. Right? Each year, it got more and more in depth of how to actually use the concepts, but you want to learn the concepts first. Look at the core content, then start looking at the mentorships. Looking at the mentorships without studying the content ain't gonna do nothing but confuse you. Right? All right. I got 30 minutes before I got to get on my one-on-one. I appreciate y'all. I ain't got no more time for questions. Hopefully y'all got something out of this, man. Tomorrow is Tuesday, so no tape reading tomorrow. I'll see y'all at 6 for the price action recap. Hey, it's your boy Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's just Big Spot if you don't hablo Espanol. This has been another episode of the Intraday Price Action Recap. Until the next time I decide to get on Al Gore's internet and share my thoughts on this thing they call price action, y'all be safe out here in these trading streets, man. I'm gone.